I had one guy who had invested, first investment in crypto was a sports betting thing. He invested $250,000, and all of a sudden he had to admit to his wife that he had just lost a significant amount of money. He had taken 401k money out. I mean, this is really devastating. Now, what can you do from a tax point of view? There is a silver lining in the tax code that allows you to get a break on that. There's a couple different ways of doing that, and they depend on whether or not you're able to produce evidence that someone was indicted or a company was indicted related to this. So it might be even in a different country. But if someone has been indicted for executing a pig butchering scheme, that's really helpful. In that case, you can use the Ponzi scam treatment, which is located on Form 4684 on Part C. And that allows you to basically claim all the money you put in, not the artificial growth, but the money you put in as a current year deduction on your taxes on Schedule A, which is pretty incredible. You can get all that written off on your first year taxes. If no one was indicted, then, which is typically the case, then you're limited to claiming it as a capital loss. The way you do that is report it on Form 8949, which is basically a spreadsheet style form that you report all your buys and sells on. You're just going to enter this as the amount you put in as the buy price, and what you sold it for is $0. And you can take that entire amount as a capital loss, offsetting capital gains. That can go a long ways. And I will say that if it's a significant amount of money, according to Tax Code Section 6001, the burden of proving that you had this loss is on you. Merely saying you had it and you don't have any records of it is not good enough. You probably want to get some record of these transactions being had. Maybe a police report would be good, or an FBI report. You may want to contact the services of a forensic investigator to document the transfers that you made to whatever wallet that they were transferred to, so that that person could document that this was actually a wallet that was used in other scam services. That might be something you need to consider, of course. It might be something that if you can keep those records, you can recreate that if you're audited, because the blockchain never goes away as a record. So you can just wait till that event occurs. But that's what's involved with those two options. And it's just really shame, but don't forget to take advantage of the silver lining in these pig butchering schemes, which is you can get some of that reducing off other income that you're paying taxes on. That's so big. So if you have any questions, please contact our office at CryptoTaxAudit.com, schedule a consultation, and we can give you some further advice on that.